Based on the provided data, a potential investment strategy for Bitcoin is as follows. The historical data shows a period of consolidation followed by a slight upward trend. The forecast data suggests this upward trend might continue, with prices fluctuating around the 83,000 to 84,000 range. Given the support at 82500 and the resistance at 90600, a long position could be considered. A buy order could be placed around 82,800, with a stop loss set at 82,500 to limit potential losses. The target price could be set at 84,500, aiming to capitalize on the predicted upward movement. This strategy incorporates the support level as a risk management tool and the forecast price as a potential profit target. Based on the provided data, Bitcoin Cash appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with the price dropping significantly from $391 to $333. The forecast data also suggests a continuation of this downtrend, with prices predicted to remain below $340 for the next week. Therefore, a short position is recommended. A suitable entry price for a short position would be around $340, as this is near the upper end of the recent trading range and close to the predicted resistance level. The stop-loss price should be set at $345, slightly above the entry price, to limit potential losses. The target price could be set at $320, which represents a significant downside move based on the historical trend and forecast data. Alternatively, a trailing stop-loss strategy could be employed, adjusting the stop-loss price upwards as the price moves in favor of the trade. Based on the provided data, Stacks appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data suggests this trend will continue. The RSI, hovering around 35, indicates the asset is not oversold, suggesting there's room for further downward movement. The Bollinger Bands are also narrowing, hinting at a potential breakout in either direction. Given this analysis, a bearish strategy is recommended. Enter a short position at the market price, around 62 cents, with a stop-loss order placed above the recent resistance level at 66 cents. This stop-loss protects against a potential reversal. The target price should be set at the support level of $0.616, which has held strong in the past. This strategy capitalizes on the downtrend while managing risk through a well-defined stop-loss. Based on the provided data, Ethereum appears to be in a downtrend. The historical price data shows a consistent decline, with the price falling below the support level of $1,880 on several occasions. The forecast data further supports this downtrend, with prices projected to remain relatively low for the next week. Considering these factors, a short position strategy is recommended. Enter a short position at the market price, with a stop-loss order placed at $1,930. This stop-loss level is chosen to account for potential short-term price fluctuations and to protect against significant losses. The target price for this trade is set at $1,780, based on the historical support level and the projected downtrend. This target price represents a potential profit of approximately 7% from the entry price. Based on the provided historical and forecast data, XRP appears to be in a slight upward trend. The price has bounced off the support level of $2.38 and is showing signs of potential growth. The forecast data suggests a continuation of this upward trend in the coming week. Therefore, a long position is recommended. A suitable entry price would be around $2.34, close to the current price and the predicted low for the week. A stop-loss order should be placed at $2.30, below the recent support level, to limit potential losses. The target price could be set at $2.46, aligning with the predicted high for the week and representing a potential 5% return. This strategy utilizes the upward trend and the forecast data to capitalize on a potential price increase. Based on the provided data, Binance Coin appears to be in an upward trend. The historical price data shows a consistent upward movement, with the price breaking above the resistance level of $630 on March 20th. The forecast data also suggests continued upward movement, with prices projected to reach $638 by March 27. The RSI indicator shows that the asset is not overbought, currently hovering around 55.4. Considering these factors, a long position could be considered. A potential entry price for a long position would be around $620, with a stop loss set at $600 to limit potential losses. The target price could be set at $640, aiming to capture the projected upward movement. The Bollinger Bands suggest that the price is within the upper band, indicating potential volatility. However, the trend is still upward, making a long position potentially profitable. This strategy combines the upward trend, positive forecast, and RSI levels to create a high-return investment opportunity. Based on the provided data, Stellar appears to be in a slight downtrend. The price has been steadily declining over the past 2 weeks, with support holding around $0.242. The forecast data suggests a continuation of this downtrend in the coming week. However, the RSI is showing signs of oversold conditions, potentially indicating a short-term bounce. Therefore, a strategy could involve entering a long position around the $0.275 level, with a stop-loss placed at $0.242. This stop-loss level is based on the identified support price and aims to limit potential losses. The target price could be set at $0.284, based on the forecast price for the week and the potential for a short-term rebound. Based on the provided data, Toncoin appears to be in an uptrend. The historical price data shows a consistent upward movement, and the forecast data suggests this trend will continue. The RSI indicator is also supportive of this view, as it has been consistently above the oversold level of 20. We can enter a long position at the current price of $3.45. A stop-loss order should be placed at $3.30, which is below the recent swing low. The target price for this trade is $3.86, which is the identified resistance level. The Bollinger Bands also support this strategy, as the price is currently trading above the middle band and the upper band is widening, indicating increasing volatility and potential for further upside. The strategy combines the upward trend, bullish RSI, and widening Bollinger Bands to create a strong case for a long position in Toncoin. Based on the provided data, Cardano appears to be in a sideways trend with a slight downward bias. The price has been fluctuating within a range, with support at 0.673 and resistance at 0.803. The RSI is hovering around the neutral level of 50, suggesting indecision. The Bollinger Bands are relatively tight, indicating low volatility. Given these factors, a cautious approach is recommended. A potential long position could be initiated if the price breaks above the resistance level of 0.803. The entry price would be 0.805, the stop loss would be placed at 0.724, previous swing low, and the target price would be 0.85, based on the previous resistance level. Alternatively, a short position could be considered if the price falls below the support level of 0.673. The entry price would be 0.673, the stop loss would be 0.726, previous swing high, and the target price would be 0.62, based on the previous support level. Based on the provided data, Litecoin appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with the price dropping from $104 to $93.3. The forecast data also suggests a continuation of this downtrend, with prices predicted to remain below $94 for the next week. The RSI indicator is hovering around the 40 level, indicating that the market is not oversold. Therefore, a bearish strategy is recommended. Enter a short position at $93.3. The closing price of March 20th set a stop-loss order at $94.1, the resistance level. The target price is $88.7, the lowest forecast price for the next week. This strategy aims to capitalize on the continued downtrend in Litecoin. Based on the provided data, Swaycoin appears to be in a downtrend with potential for further decline. The price has been consistently making lower lows and lower highs over the past 2 weeks. The RSI is hovering around the neutral level, indicating a lack of strong momentum in either direction. However, the Bollinger Bands suggest that the price is nearing the lower bound, which could signal a potential bounce. A long position could be considered if the price bounces off the support level of 2.32 and breaks above the resistance level of 2.48. A good entry price for a long position would be around 2.35, with a stop-loss order placed at 2.28 to limit potential losses. The target price could be set at 2.55, aiming for an 8% profit. This strategy leverages the potential for a short-term bounce while also managing risk with a tight stop-loss. Based on the provided historical and forecast data, Aptos appears to be in a downtrend. The price has been steadily declining over the past 2 weeks, with support holding at around $5.15. The forecast data suggests this downtrend may continue in the coming week. A potential entry point for a short position could be around $5.40, with a stop-loss order placed above the recent high at $5.47. The target price could be set at $5.15, the identified support level. To further enhance this strategy, we can incorporate the RSI and Bollinger Bands indicators. The RSI is currently hovering around 48, suggesting the asset is not yet oversold. However, a move below 40 could signal further downward momentum. Additionally, the price is currently trading near the lower Bollinger Band, indicating potential for further downward movement. It's important to note that this strategy carries inherent risk, and careful risk management is crucial. Based on the provided data, SE appears to be in a downtrend. The historical price data shows a consistent decline, with the price falling below the support level of $0.182 on several occasions. The forecast data further suggests a continuation of this downtrend, with prices expected to remain below $0.2 for the next week. Therefore, a short position strategy is recommended. Enter a short position at the market price when the price breaks below the support level of $0.182. Set a stop-loss order at $0.188 to limit potential losses. The target price for this trade is $0.175, based on the projected downtrend and historical price action. This strategy utilizes the support level break and the forecast data to identify a potential entry point and manage risk. Based on the provided data, Ethereum Classic appears to be in a downtrend. The historical price data shows a consistent decline, with support at $17.5. The forecast data suggests this downtrend might continue, with prices hovering around $17.8 for the next week. Therefore, a bearish strategy is recommended. Enter a short position at $18.1, the current resistance level. Set a stop-loss order at $18.6, the recent high, and a break of this level would invalidate the downtrend thesis. The target price is $17.5, the support level. This strategy leverages the potential for further price decline while managing risk with a defined stop-loss. Based on the provided data, Polygon appears to be in a downtrend. The historical price data shows a consistent decline, with the price falling below the support level of $0.21 on several occasions. The forecast data suggests this downtrend will continue, with prices predicted to remain below $0.21 for the next week. Considering this downtrend, a suitable strategy would be to short Polygon at the entry price of $0.214. The stop-loss price should be set at $0.218, aiming to limit potential losses. The target price could be set at $0.196, based on the forecast data, which indicates a potential decline to that level. This strategy leverages the downtrend and utilizes technical indicators to manage risk. Based on the provided data, AEVO appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data suggests further downward movement. The RSI is hovering in oversold territory, indicating potential for a short-term bounce, but the overall trend remains bearish. Therefore, a bearish strategy is recommended. Enter a short position at the market price when the price breaks below the support level of $0.117. Set a stop-loss order at $0.120 to limit potential losses. The target price for this trade is $0.105, based on the forecast data and the downtrend. Based on the provided data, optimism appears to be in a sideways trend with a slight bearish bias. The price has been fluctuating between the support level of 0.877 and the resistance level of 0.92. The RSI indicates that the asset is not oversold or overbought, suggesting a potential for continued consolidation. The Bollinger Bands are narrowing, indicating a decrease in volatility. Considering these factors, a potential strategy could involve waiting for a break above the resistance level of 0.92. A buy order could be placed at 0.925 with a stop loss at 0.88, targeting a profit of 0.97. Alternatively, if the price breaks below the support level of 0.877, a sell order could be placed at 0.874 with a stop loss at 0.88, targeting a profit of 0.85. It's important to note that this is just a suggestion and should be further analyzed and adjusted based on your own risk tolerance and trading style. Based on the provided data, STRK appears to be in a downtrend. The historical price data shows a consistent decline, with the forecast data predicting further downward movement. The support and resistance levels also indicate a bearish sentiment, with the resistance at 0.175 consistently holding strong. Therefore, a bearish strategy is recommended. A good entry point would be around 0.172, near the resistance level and recent price action. The stop loss should be placed above the recent high at 0.176, limiting potential losses. The target price could be set at 0.155, which aligns with the support level and the predicted downward trend. Based on the historical and forecast data, Solana appears to be in a sideways trend with a slight downward bias. The support price at $118 provides a floor for the price, while the resistance at $135 acts as a ceiling. The RSI is currently hovering around 40, indicating that the asset is neither overbought nor oversold. The Bollinger Bands are relatively compressed, suggesting a period of consolidation. Therefore, a potential strategy could involve waiting for a breakout above the resistance level of $135. A buy entry could be triggered at $135.50 with a stop-loss order placed at $118 to protect against a reversal. The initial target price could be set at $150, with the potential for further upside if the breakout gains momentum. This strategy leverages the potential for a bullish reversal while managing risk through a well-defined stop-loss. Based on the provided data, Jupiter appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data suggests this trend will continue. The RSI, while showing some fluctuations, remains below 30 for most of the period, indicating oversold conditions. However, the recent rise above 30 suggests a potential short-term bounce. Considering these factors, a cautious short position could be considered. Enter a short position at the opening price on March 21, 2025, with a stop-loss order placed at 0.502, slightly above the recent support level. The target price could be set at 0.468, the lowest forecast price. This strategy leverages the downtrend and oversold conditions while mitigating risk with a tight stop-loss. Based on the provided data, Render appears to be in a downtrend. The historical price data shows a consistent decline, with the price hovering around the support level of $3.16. The forecast data suggests this downtrend might continue, with prices predicted to remain below the resistance level of $3.45. Therefore, a short position could be considered. A suitable entry price for a short position would be around $3.22, the closing price on March 20th. The stop-loss order should be placed at $3.3, slightly above the recent high and the support level. The target price could be set at $2.98, based on the forecast data and the historical price action. This strategy leverages the potential continuation of the downtrend and aims to capitalize on the price decline. Based on the provided data, Solana name service appears to be in a sideways trend with a slight downward bias. The historical price data shows consolidation around the support level of $0.109, with occasional dips below this level. The forecast data suggests a continuation of this sideways movement with a slight downward pressure. Considering these factors, a potential strategy could involve a short position. Enter a short position at $0.112, with a stop-loss order placed at $0.116 to limit potential losses. The target price for this trade could be set at $0.106, based on the forecast data and the support level. The RSI indicator shows that the asset is currently trading in a neutral zone, with values fluctuating between 33.6 and 46.3. The Bollinger Bands are also suggesting a sideways trend, with the price oscillating within the bands. However, the recent price action has been closer to the lower band, indicating a potential for further downward movement. This supports the short position strategy outlined above. Based on the provided historical and forecast data, Doge-Coin appears to be in a downtrend. The price has been steadily declining over the past 2 weeks, and the forecast suggests this trend will continue in the coming week. The RSI indicator is hovering around oversold levels, indicating potential for a short-term bounce. However, the overall trend and support/resistance levels suggest a bearish outlook. Therefore, a short position could be considered. A suitable entry price would be around 0.170, with a stop-loss order placed at 0.178 to limit potential losses. The target price could be set at 0.150, aiming to capture a potential downside movement. This strategy utilizes the downtrend and oversold RSI to enter a short position, while the stop-loss protects against unexpected upward movements. Based on the provided data, PEPE shows a sideways trend with slight upward momentum. The historical price data, coupled with the forecast, suggests a potential continuation of this upward movement. The RSI indicator fluctuates within a healthy range, indicating neither overbought nor oversold conditions. A potential entry point could be around $0.0000710, with a stop-loss order placed at $0.0000570 to mitigate risk. The target price could be set at $0.0000890, representing the resistance level. This strategy leverages the potential upward momentum while managing risk through a defined stop-loss. Based on the provided data, SHIB appears to be in a sideways trend with a slight downward bias. The historical price data shows fluctuations around the support level of $0.0000126. The forecast data suggests a continuation of this sideways movement with a potential dip towards the support level. We will adopt a strategy based on the RSI indicator with oversold and overbought levels set at 20 and 80, respectively. We will look to enter a long position when the RSI falls below 20, indicating an oversold condition. A suitable entry price would be around $0.0000126, coinciding with the support level. The stop-loss order will be placed below the recent swing low, around $0.0000125, to limit potential losses. The target price will be set at the resistance level of $0.0000131, aiming for a potential profit of approximately 5%. This strategy aims to capitalize on potential rebounds from the oversold conditions while managing risk through a tight stop-loss order. Based on the provided data, DOG-COIN appears to be in a downtrend. The historical price data shows a consistent decline, with the price dropping below the support level of 0.466 on several occasions. The forecast data also suggests a continuation of this downtrend. Therefore, a short position strategy is recommended. A suitable entry price would be around 0.47, the predicted price for March 21st. The stop-loss order should be placed at 0.481, slightly above the recent high. The target price could be set at 0.434, the predicted price for March 24th, based on the forecast data. This strategy leverages the downtrend and aims to capitalize on the potential price decline. Based on the provided data, Doge-Coin appears to be in a sideways trend with a slight upward bias. The historical price data shows a range between 0.00178 and 0.00257, with recent price action hovering around the 0.0024 level. The forecast data suggests a continuation of this sideways trend, with prices potentially dipping slightly towards the 0.0022 level before potentially rebounding. Given these observations, a potential entry strategy could be to buy Doge-Coin around the 0.00224 level, the first forecast price. A stop-loss order could be placed at 0.00219, the second lowest forecast price, limiting potential losses. The target price could be set at 0.00252, the highest recent price and a level where the Bollinger Bands are widening, indicating potential breakout. This strategy leverages the potential for a rebound within the existing range while managing risk with a tight stop-loss order. Based on the provided data, Near protocol appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data suggests this trend may continue. The RSI indicates that the asset is not oversold, but it is hovering around neutral levels. The Bollinger Bands show that price is trading below the middle band, further supporting the downtrend hypothesis. Therefore, a short position is recommended. Enter a short position at the market price near the resistance level of $2.80. Set a stop-loss order at $2.85 to limit potential losses. Target a profit at $2.50, which aligns with the support level and the predicted price decline. This strategy combines the trend analysis with the support and resistance levels, aiming to capitalize on the expected price movement. Based on the provided data, Internet Computer appears to be in a downtrend. The historical price data shows a consistent decline, with the price hovering below the resistance level of 5.95. The forecast data also suggests a bearish outlook, with prices predicted to remain below the current level. Considering the RSI, the current level is around 43.6, indicating that the asset is not oversold. However, the Bollinger Bands suggest a potential for further downside movement as the price is approaching the lower band. Therefore, a conservative strategy would involve waiting for a confirmation of the downtrend, such as a break below the support level of 5.66, before entering a short position. The entry price would be around 5.65, with a stop-loss placed at 5.75 to limit potential losses. The target price could be set at 5.40, based on the forecast data and the potential for further downward movement. Based on the provided data, Injective appears to be in a downtrend. The historical prices show a consistent decline, and the forecast prices suggest this trend will continue. The RSI, while showing some fluctuation, remains below 50, indicating bearish sentiment. The Bollinger Bands, with the price consistently trading below the middle band, further support the downtrend. A suitable strategy would be to initiate a short position at the entry price of $9.65, the closing price on March 20th. The stop-loss price should be set at $9.88, the highest closing price during the historical period, to limit potential losses. The target price could be set at $8.81, the lowest closing price during the historical period, aiming for a significant profit. Based on the provided historical and forecast data, BTC appears to be in a downtrend. The price has been consistently decreasing over the past 2 weeks, with the forecast indicating further decline in the coming week. The support price at $240 suggests a potential floor for the price, while the resistance at $262 acts as a barrier to upward movement. A strategy could involve short selling BTC when the price approaches the resistance level of $262. A stop-loss order could be placed at $265 to limit potential losses, while a target price of $230 could be set based on the forecast and the downtrend. This strategy utilizes the resistance level and the downtrend as entry signals. Additionally, the RSI indicator, with its oversold level of 20 and overbought level of 80, can be used to confirm entry and exit points. A bearish crossover of the RSI below 30 could further strengthen the short signal, while a move above 70 could indicate a potential reversal and trigger a cover order. Based on the provided historical and forecast data for THETA network, a potential bullish strategy emerges. The price has shown a tendency to bounce off the support level of $0.902, and the forecast suggests a potential upward movement in the coming week. Therefore, a long position could be considered with an entry price around $0.879, the first forecast price. A stop-loss order should be placed at $0.86 to limit potential losses. The initial target price could be set at $0.963, the recent resistance level. This strategy leverages the potential for a rebound from the support level and a positive price trend indicated by the forecast. Based on the provided data, WorldCoin appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data suggests this trend will continue in the coming week. The RSI indicator is currently hovering around 40, indicating that the asset is not oversold. However, the Bollinger Bands suggest that the price is approaching the lower band, which could indicate a potential bounce. Therefore, a conservative strategy would be to wait for a bullish signal, such as a bounce off the lower Bollinger Band or a rise in RSI above 45, before entering a long position. A potential entry price would be around 0.810 with a stop-loss order placed at 0.790 to limit potential losses. The target price could be set at 0.880, aiming for a profit of approximately 8%. This strategy combines the trend analysis with the potential for a short-term bounce, aiming for a balanced risk-reward ratio. Based on the provided historical and forecast data, Hooked Protocol appears to be in a downtrend. The price has been steadily declining over the past 2 weeks, with support at 0.139 and resistance at 0.154. The forecast data suggests this downtrend may continue in the coming week. Therefore, a short position strategy is recommended. Enter a short position at the market price when the price reaches 0.146. Set a stop-loss order at 0.154 to limit potential losses. The target price for this trade is 0.132, based on the forecast data and the downtrend. This strategy combines the identified downtrend with the price reaching the resistance level, creating a potentially profitable short opportunity. Based on the provided historical and forecast data, Artificial Superintelligence Alliance appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, with the support level at $0.507. The forecast for the next week also indicates a bearish sentiment, with prices projected to remain below $0.500. Therefore, a short position strategy is recommended. Enter a short position at the market price when the price reaches $0.507. Set a stop-loss order at $0.523 to limit potential losses. The target price for this trade is $0.469, based on the forecast data. This strategy capitalizes on the downtrend and the oversold RSI levels. Based on the historical and forecast data, Polkadot appears to be in a sideways trend, oscillating around the support level of $4.32. The RSI is currently hovering around 47.8, indicating neither overbought nor oversold conditions. The Bollinger Bands suggest a tightening range, further supporting the notion of a consolidation period. Given these factors, a conservative strategy would be to wait for a clear breakout above the resistance level of $4.64 before entering a long position. A potential entry price could be around $4.68, with a stop-loss placed below the recent support level at $4.32. The target price could be set at $5, representing a potential upside of 6.8%. This strategy aims to capitalize on a potential upward momentum while managing risk by setting a tight stop-loss. Based on the provided data, Filecoin appears to be in a sideways trend with a slight downward bias. The historical price data shows fluctuations around the support level of $3.01. The forecast data suggests a continuation of this sideways movement with prices hovering around the $3 mark. Given this, a potential strategy could involve entering a long position when the price bounces off the support level at $3.01. A stop-loss order could be placed below the recent low of $2.65 to limit potential losses. The target price could be set at the resistance level of $3.1, aiming for a profit of approximately 3%. Furthermore, incorporating the RSI indicator, we can look for oversold conditions below 20 to confirm the entry signal. The Bollinger Bands suggest that prices are currently within the middle band, indicating a potential for consolidation. However, if the price breaks above the upper band, it could signal a potential upside breakout. Ultimately, the most efficient strategy would be a combination of these three approaches, with a long entry triggered by a price bounce off support, confirmed by RSI oversold conditions, and with a stop loss placed below recent lows and a target price set at the resistance level. Based on the provided data, Conflux appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data suggests this trend will continue. The support level of 0.0833 acts as a temporary floor, but the resistance level of 0.0911 is unlikely to be breached in the near term. Therefore, a short position is recommended. Enter a short position at the market price, with a stop-loss order placed at 0.0888, slightly above the recent swing high. The target price should be set at 0.0731, the recent swing low, aiming for a potential profit of around 18%. This strategy leverages the downtrend and the support/resistance levels. Additionally, the RSI indicates the asset is oversold, providing further justification for a short position. Based on the provided data, Ethereum name service appears to be in a downtrend. The historical price data shows a consistent decline, with support holding around $16.1. The forecast data predicts further price drops in the coming week. Given this, a bearish strategy is recommended. Enter a short position at the market price, with a stop-loss order placed at $17.9, the recent resistance level. The target price should be set at $15.3, which aligns with the predicted lows in the forecast data. The RSI indicator, currently at 37.1, is below the overbought level of 80, suggesting that the downtrend may continue. Additionally, the price action is trading below the Bollinger Bands, indicating a bearish momentum. While the RSI is not oversold, the combination of the downtrend, support level, and Bollinger Bands suggests that a short position is a more suitable strategy at this time. Based on the provided data, Avalanche appears to be in a sideways trend with a slight bearish bias. The price action has been consolidating between the support level of 18.2 and the resistance level of 19.8. The RSI indicator is hovering around the neutral level, suggesting a lack of strong momentum in either direction. The Bollinger Bands are relatively compressed, indicating low volatility. A potential strategy could involve waiting for a clear breakout above the resistance level of 19.8. If the price breaks above 19.8, a long position could be initiated with an entry price at the breakout level. The stop-loss order could be placed below the recent support level of 18.2, and the target price could be set at 21.5, representing an 8.6% gain. Alternatively, if the price drops below the support level of 18.2, a short position could be considered with an entry price at the breakdown level. The stop-loss order would be placed above the recent resistance level of 19.8, and the target price could be set at 17.0, representing a 7.7% gain. Based on the provided data, Doge-Coin appears to be in a sideways trend with a slight downward bias. The historical data shows price fluctuations within a defined range, with support at 0.0246 and resistance at 0.0268. The forecast data suggests a continuation of this sideways movement with prices likely to remain within this range. A buy signal could be generated if the price breaks above the resistance level of 0.0268. Therefore, a potential strategy could involve entering a long position when the price breaks above 0.0268 with a stop-loss order placed below the recent support level of 0.0246. The target price could be set at 0.0278, the previous high, or even higher depending on the strength of the breakout. This strategy leverages the potential for a bullish reversal while managing risk by placing a stop-loss order below the support level. Based on the provided historical and forecast data for PENDLE, a potential bullish strategy can be implemented. The price has shown a general upward trend over the past 2 weeks, with a support level around $2.39. The forecast suggests continued growth in the coming week, with prices potentially reaching $2.46. Therefore, a long position could be initiated when the price reaches $2.39, with a stop-loss order placed at $2.35 to minimize potential losses. The target price for this trade could be set at $2.46, aiming for a profit of approximately 3%. Additionally, the RSI indicator suggests that the asset is currently in a neutral zone, with values hovering around 35. This indicates that there is room for further upside potential. The Bollinger Bands show that the price is currently trading below the middle band, suggesting a potential for a breakout and further upward movement. By combining these technical signals, a long position with an entry price of $2.39, a stop-loss of $2.35, and a target price of $2.46 offers a potentially profitable opportunity. Based on the provided data, the sandbox appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data suggests this trend may continue. The RSI indicator is currently hovering around 40, indicating that the asset is not oversold. However, the Bollinger Bands suggest a potential for further downward movement as the price is approaching the lower band. Therefore, a bearish strategy is recommended. Enter a short position at the market price when the price breaks below the support level of 0.283. Set a stop-loss order at 0.298, which is the recent resistance level, to limit potential losses. The target price could be set at 0.251, the bottom of the Bollinger Bands, or a lower level if the downtrend continues. This strategy aims to capitalize on the potential for further price decline in the sandbox. Based on the provided data, Decentraland appears to be in a short-term downtrend. The historical price data shows a consistent decline over the past 2 weeks, with the price falling below the support level of $0.257 on several occasions. The forecast data suggests that this downtrend is likely to continue in the coming week. Given this bearish outlook, a suitable strategy would be to sell Decentraland at the current market price of $0.27. The stop-loss order should be placed at $0.278, which is slightly above the recent high. The target price for this trade could be $0.257, representing a potential profit of 5%. This strategy utilizes the current bearish trend and the identified support level to maximize potential returns while minimizing risk. Based on the provided data, ENG coin appears to be in a short-term downtrend. The historical price data shows a consistent decline, with the price falling below the support level of $0.0872 on several occasions. The forecast data suggests that this downtrend may continue, with prices predicted to remain below the resistance level of $0.0997. A suitable strategy would be to enter a short position when the price reaches the resistance level of $0.0997. The stop-loss order should be placed at $0.101, above the recent high. The target price could be set at $0.0872, the identified support level. This strategy leverages the potential for further price decline while managing risk through a well-defined stop-loss order. Based on the provided data, Uniswap appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with support holding at around $6.37. The forecast data suggests this downtrend may continue, with prices predicted to remain below the recent highs. A bearish strategy could be implemented, entering a short position at the market open on March 21, 2025, with a stop-loss order set at $6.41, above the predicted high for the day, and a target price of $6, representing a 7% decline from the entry price. This strategy leverages the expected continuation of the downtrend and aims to profit from the predicted price decline. Alternatively, a strategy based on RSI could be employed. The RSI indicator is currently hovering around 46, indicating that the asset is not oversold. However, if the RSI falls below 30, signaling an oversold condition, a long position could be considered. In this scenario, the entry price would be at the market open on the day the RSI falls below 30, with a stop-loss order placed below the recent swing low and a target price set at a level that represents a reasonable upside potential based on historical price action. This strategy capitalizes on potential oversold bounce opportunities while mitigating risk through a defined stop-loss. Based on the provided data, Chainlink appears to be in a short-term downtrend. The historical price data shows a consistent decline, with the price dropping below the support level of $13.9 on several occasions. The forecast data also suggests a continuation of this downtrend in the coming week. Therefore, a bearish strategy is recommended. Enter a short position at the market price when the price breaks below the support level of $13.9. Set a stop-loss order at $14.2 to limit potential losses. The target price for this trade is $13, based on the recent price action and the forecast data. This strategy utilizes the support and resistance levels and the predicted price movement. Based on the provided data, Aave appears to be in a downtrend. The historical price data shows a consistent decline, with the price dropping from $196 to $164 over the past 2 weeks. This trend is further supported by the forecast data, which predicts a continuation of the decline in the coming week. The RSI indicator is also suggesting a bearish sentiment, hovering below 50 for most of the period. Given this bearish outlook, a short position is recommended. A suitable entry price would be around $169, which aligns with the current price and the predicted dip. The stop-loss order should be placed at $175, providing a cushion against potential upward price movements. The target price could be set at $160, reflecting the potential for a further decline in line with the overall trend. This strategy aims to capitalize on the existing downtrend while managing risk through a well-defined stop-loss order. Based on the provided data, a potential investment strategy for EOS could involve a long position. The historical price data shows a recent downtrend, but the forecast suggests a potential reversal with prices moving upwards. The RSI indicator is currently hovering around 40, indicating a potentially oversold condition. Therefore, we can consider entering a long position at the current market price of around $0.55. The stop-loss order should be placed at $0.535, which coincides with the strong support level observed in the historical data. The target price could be set at $0.578, which is the recent resistance level. This strategy aims to capitalize on the potential upward momentum predicted by the forecast data and the oversold condition indicated by the RSI. Based on the provided data, Tron appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, with support at $0.231 and resistance at $0.238. The RSI is hovering around the neutral level, indicating that the market is not overly bullish or bearish. The Bollinger Bands are also converging, suggesting a potential for a breakout in either direction. Considering these factors, a potential strategy could be to enter a short position when the price breaks below the support level of $0.231. A stop-loss order could be placed at $0.233 to limit potential losses. The target price could be set at $0.220 based on the recent downtrend. This strategy utilizes the support and resistance levels, as well as the potential for a breakout below support. However, it is important to note that this is just a potential strategy and should be carefully considered before implementation. Based on the provided data, Suncoin appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with the price falling below the support level of $0.0168 several times. The forecast data also suggests a continuation of this downtrend, with prices predicted to remain below the resistance level of $0.0172. Considering these factors, a bearish strategy is recommended. Enter a short position at the market price when the RSI dips below 30, indicating oversold conditions. Set a stop-loss order at $0.0172, slightly above the recent resistance level, to limit potential losses. The target price for this trade is $0.0155, based on the historical support levels and the projected downtrend. This strategy aims to capitalize on the potential continuation of the downtrend in Sun Coin.